Hey, good morning everybody. Today is Friday, February 20th, 2015. My name is Cliff Backus. I'm the Chief Market Strategist for Push Button Stock Trading, and this is your daily video market review. Stocks finished mixed again yesterday, with the NASDAQ recording its 7th consecutive up day, while the S&P posted a minimal loss. Let's get started. What we're looking at here is a weekly chart of the NASDAQ composite that goes all the way back to the beginning of the bull market. This bull market, which is now the longest bull market in history, began back in March of 2009. We've drawn in two trend lines. The first is a long-term trend line, and the second is our intermediate trend line. What I want to do is zoom in on this intermediate trend line. The intermediate trend line is important because we're going to use that to establish a channel, a trading channel for the NASDAQ composite. And the way we're going to do that is we are going to make a parallel line to the trend line, and we're going to move that up to the highest point between the first touch of our trend line, or the origin of our trend line right here, and the last touch of our trend line, which is going to be right here. So the highest point becomes this point right here, and this becomes our trading channel. The reason that's important is that for right now, the NASDAQ is bracketed by support in the 4811 area and resistance at that upper trend line. Zooming in a little bit more, we see that yesterday the NASDAQ was up 18.34 points, or 0.37%. That's the 7th up day in a row for the NASDAQ. 1, 2, 3, 4, 5, 6, 7. You would think that sooner or later this NASDAQ has to take a rest and consolidate some of these gains. This is an impressive move right here in the NASDAQ, and I would expect some consolidation and maybe a pullback to this area of support in the 4811 range. Volume yesterday was below average. It was below the prior day. Typically on an up day you want to see heavier volume. We have seen this tail off in volume, which indicates to me that perhaps we are due for a little bit of a correction here. We are in a confirmed uptrend in the market with 4 distribution days in the past month. Those 4 distribution days coincide with 6 accumulation days over the course of the same month. A distribution day is simply a day of professional selling. It's a day when the market moves at least 0.2% lower on higher trading volume than the prior day. It's a sign of institutional selling, and what we're trying to do with our momentum investing, or O'Neill style investing, is we're trying to get out in front of the institutions. So it's very important that we know whether the institutions are selling or buying. Over the same period of time that we've had those 4 distribution days, the past month, we've had 6 accumulation days, and those are right here. 1, 2, 3, 4, 5, 6. An accumulation day is a day of professional buying, and an accumulation day by definition is any day where the market closes higher on heavier trade than the prior day. Anytime you get more institutional buying in a 1 month period than institutional selling, it's a good sign for the bulls. Like distribution, the older an accumulation day gets, the less relevant it becomes, and we stop counting accumulation days after a month. I want to note that these 3 accumulation days will fall off of our count because they've become over a month old. That will leave us with 4 accumulation days and 3 distribution days in the most recent month, assuming no additional accumulation or distribution next week. The short-term rally is getting a little bit long in the tooth here, and I would expect some consolidation. I want to take a quick look at our MACD histogram. MACD histogram yesterday closed above the 0 line. It's actually in a little bit of a downtrend here. Because we have the MACD histogram above the 0 line, that gives us a bullish signal. But the downtrend gives us a bearish signal. And so our immediate bias on the NASDAQ composite right now is neutral. Let's take a look at the S&P 500. The S&P 500 yesterday closed down 2.23 points, or 0.11%. NASDAQ closed right about the middle of its daily trading range. It's neither bullish nor bearish. It did, however, hold support resistance in the 2094 area. This area really is minor support, short-term support right now. I have not changed it to support because we haven't really decisively cleared this resistance area. Notice every day that we've closed above that resistance area, we've actually traded below that during the course of the day. Trading volume yesterday was lower. It was below normal. Not really much to be gleaned from yesterday's market activity. We are in a confirmed uptrend on the S&P 500. We have 3 distribution days. That compares to 1, 2, 3, 4, 5, 6 accumulation days on the S&P 500. Note we lost an accumulation day due to age right here. Our 1 to 6 month timing model has fallen to a buy signal. What that means is that conservative traders should be fully invested, should be rotating weaker positions out of their portfolios and holding on to stronger positions. Aggressive traders should no longer be adding leverage to their portfolios. Let's take a quick look at the MACD histogram on the S&P 500. Yesterday, the MACD histogram closed above the 0 line, but as you can see, we've entered a short-term downtrend on the S&P histogram. So, closing above the 0 line gives us a bullish signal. This downtrend gives us a bearish signal. We are neutral on the immediate bias for the S&P 500. That's about all I have today. If you want to talk about the markets or any of our trading strategies, please feel free to give me a call, drop me an email, or if you'd prefer, make an appointment. Come on by the office, see what we're up to. If you're out of the area, we can set up a Skype session. See my contact information on the home page. Also, if you've not already done so, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. Finally, please take a look at our video disclaimer, which will commence as soon as I get done talking. Again, my name is Cliff Backus. That's your video market review for today. Have a safe and profitable day. Keep your stops in place, and I'll see you again on Monday. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson LaCours Incorporated believes to be accurate. Ohanneson LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson LaCours, Inc., its affiliates and subsidiaries and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.